Good morning, crypto traders and crypto investors. Last few days I've been really busy with doing some calculations, really gotten into nuts and bolts of trading, and I've tested a few strategies and some win rates. But what was really interesting also, I did a bit of analysis of fees and the importance of fees when you're trading. And this will apply for, I would say, for traders, especially for day traders, intraday traders, even for position traders. Maybe not that much for like really long-term investors, and you'll see why. And I have to tell you that this is quite advanced. The calculations here are quite complex. I had to use a little bit of Excel skills that I use that I learned in auxiliary course. But all in all, even if you don't understand Excel, I will just tell you the main points, and I'm gonna kind of lead you through what I was playing around with. And for those of you who actually want this Excel sheet to do your own calculations, you can send me an email to blockchainbags@gmail.com. So yeah, let's get into it. So for this example, I'll actually do a few different examples, but for this one, the first one, let's assume that we buy one Bitcoin at, and I hope you guys can see this. I know it can be one of the followers said that it's hard to read the numbers on the charts, so but here I kind of have to do it like that. I'll zoom in here and then I'll zoom out. Actually, I'll do it like that. So in this example, we buy one Bitcoin, and let's just assume that the price of Bitcoin is $10,000 per Bitcoin, and we put our stop loss at 9,900. So we have a stop loss of $100, right? And we want to make a profit, and so we take our profit at 10,100. So we risk 100 and we take a profit when we reach 100. So of course, if you start thinking about fees, you would think, okay, for instance, let's say Bitfinex, but this applies to almost all of the exchanges. You have maker fee and you have a taker fee. So maker fee is usually 0.1%, and taker fee is usually 0.2%. All right. It varies a little bit from exchange to exchange, but basically maker fee is when you put a limit order in. And so let's assume that usually, depending on strategy, but let's say that you entered your position with a limit order. So, and then you had a stop loss with stop order. So maybe let's write this. So you enter position on limit order, you exit position, not exit, but you have a stop loss. You have stop loss on stop order, and you take profits on limit order. So obviously you're going to be charged for entering. You're going to be charged 0.1 for stop. When you hit your stop, you're going to be charged 0.2, and again for taking profits you're going to be charged 0.1. So we have this two numbers here. So if we win 100, and if we lose 100. But we have to add this fees to it. So if we assume that we bought at 10,000, we had to pay at limit order, we had to pay 0.1%, which is $10. And if we got stopped out, we had to pay another 0.2% at 909,000, but let's just assume that's $20. It's really, really close to that. So if you lose this trade, actually, if you look at this number here, you actually lose $130. Not just $100, but you lose $130, including fees, right? And then if you win, you would think, oh, the difference in price is 100, but actually, you only win, and this doesn't apply yet, but you actually only win $80 because you're taking the profit with limit order, so 0.1, so approximately $10 for exiting and $10 to enter. So then I have like all these tables here. They are actually, this is a spread that kind of not, it's not a spread. This calculates for me where it's the best to take your profits, and at the moment it doesn't really apply here. Is the only thing that is important is this number at the moment, so 6.5. So this is the profit that we get, but before that, of course, we need a win rate to get to this number. So we have a win rate of 65%. So that's the interesting point. So you need to win 65% of the time and only lose 35% of the time to get a minimum like really small profit of $6.5. I mean, this is almost nothing based on so every trade that you make on average, expected return will be $6.5 on a $100 risk. So that is a yield of 6.5% on the trade. And let's say that you have a break-even strategy. Let's say that you have a strategy that, half of the time you're right and half of the time you're wrong. So with every trade, you're actually losing on average $25 because of the fees, right? I mean, because people would think, okay, look, I buy a Bitcoin and I only pay $10 on a limit order. Yes, that is true. Like when you win, it looks quite nice, because when you win, let's say you pay $10 to go in and $10 to go out. So it's like, okay, look, I would get 100, but I only got $80. It's not too bad. It's only 20%. Yeah, that's true. If every trade that you do is a winner, and of course that is not possible. The problem is because you have to pay fees when you're winning and when you're losing. Right? So I hope that makes sense. So let's make some other examples. Let's say that you are more of an investor, and you say, you know what, I don't, $100 in the change of the price is not too much. Let's say I buy at 10,000 and my stop loss is actually gonna be at 9,000. So then, of course, the fees will have less of an impact, because those $30 will be added to 1,000 risk. So you will be, let's say you go in a trade and you lose your $1,000. You would actually lose 1,030, which of course is not much, percentage wise. And then if you win, you would actually win $20 less. So that's 980. But still, if you're break even, like right here, 50% chance of winning. And I can actually do this like that. It will be, I think, clearer to see. So this is 50% win rate. You, of course, are losing because of the fees, but you will go into a profit really soon. Let's say with 55% winners. Let's see, what's your profit? It's $75. So on $1,000 risk, that's 7.55 percent yield that you're getting. So this is why I said that for investors, it doesn't apply that much if you're really looking at big swings and if you're like holding positions for months. But how often do you really get? I mean, of course you get swings for 1,000, but for a trader who goes in and out, this is really, really important. And here, for instance, let's look. Okay, 77.5% for investor on this particular strategy that we just made up that has 55% win ratio. Let's see if we had no fees, so 7.55, but if we had no fees on the same, we would get 10% win rate, which you might as well think, okay, it's only 2.5%, but let's say that you're a big trader and it's not only 2.5%, it's actually you have to compare 7.5 to 10%. So for instance, let's say that your winnings long term with this strategy with fees would be 7,500, but without fees would be 10,000. So that's 33% increase from 7,500 to 10,000. So these fees are really, really, like, I can't stress enough how important it is to take note of the fees. And this was only if this was kind of like ideal scenario, because I think a lot of people, a lot of traders would actually enter on stop order or on market order, which are both maker fees. So if we go back to the example for $100, that would add $10 to your fee when you're entering. So instead of, for instance, for losing, you would actually lose 140 because you would be taken 0.2% at entry and 0.2% on exit. And then when you win, you would only win, and let's say that you also take your profit on the market order, you then only win $60. So with this, you would need, let's see how much you need to get close. I'm sure I could make that formula as well somehow to tell me exactly where was the breaking point where you get in profit. Sorry. But let's just play around with the numbers a little bit. So yeah, it's still losing there. I'm looking at that number there. Here, -7. Okay, this is not correct. That's a mistake here. So here you go. Exactly, you have to win 70% of the time. 70% of the time with these fees to even be break even. I mean, and to have a strategy that gives you 70% win ratio, it's a really, really good strategy. I mean, you're basically you should be a professional at this point, but you're not making any money because of the fees. And let's look without fees. Again, for this example, you would be making $40 on a trade. So that is a 40% yield. So you can expect from every trade on average to make $40. But with fees, you're making nothing. Nada. Niente. I mean, I really want to emphasize this, and just to make you guys aware how important it is to look at the fees. And if you can change, this is for myself, I've been using Bitfinex, and of course it depends, like the more volume that you have, then your fees decrease and stuff like that. You can check that online. I mean, it's not too, you just type in fees and you'll see how it's calculated. The more volume basically decreases from 0.1 to 0.08. But after calculating this for the last few days, I was doing a lot of calculations. I think I'm going to move to GDAX because GDAX has no fees. And this is not me, marketing it, just like telling you trader to trader. I don't get anything for telling you that. I'm going to go to GDAX. They don't have margin trading. They don't have leverage and all that. But, after seeing these numbers, it's just crazy. And I'll give you some real examples from my strategy, which is a back test, which I made with back testing. So it's in ideal scenario. So this is a strategy that I'm working on, and if it's gonna be successful as that when I actually trade it, I don't know, because this is in ideals, as I said. So don't get too excited when you see these numbers. But basically, with this strategy, okay, something is wrong here. Okay, I see what's wrong. I need to move this up like that. So this is an actual strategy that I have tested. And with this strategy, basically, I'm winning 76% of the time, which is quite crazy. I mean, it's really, really, really good. So as I said, I'll have to put it out there. I mean, because when you go back and look at the charts, it's a bit different because you see the candles I closed, and I assumed that I could enter every trade, and in realistic terms, some of the trades I would miss because the price would just move too fast and stuff like that. So with this strategy, it gets a little bit more complex. So I will get to 76%. 76% of the time, I will go to 1-to-1 ratio. 60% of the time, I would go to 1-to-2 ratio. So I would win 200, but I would lose 100 if I lose. And 48% of the time, I would actually win 4-to-1, which is just amazing to have a strategy like that. So this is why I have this table here. This table, what it does, it calculates what is the best ratio to take profits, and it's quite complicated. I mean, you don't really have to. This is really for you if you're taking profits at different terms. So, for instance, taking first, you take half of the profit on the first. For instance, take profit, then 25% on second one and third one, and on the third profit you take the rest. So this calculation actually calculates what ratio is the best to take for this particular strategy. I mean, whatever the numbers are, it will calculate you the best one. So in here, for instance, I get optimal. I can get $140 per trade on average return, and this is with no fees. And this is assuming, according to this column here, it showed me that I get the best way is just to take all the profits every single time when I come to $400 plus. And if I don't get there, just have a losing trade. But I'll get there 48% of the time. I hope that makes sense. So let's just test this because this is a real strategy that I tested. So let's look at the numbers. Without fees, I can expect $140 return. But with fees, and let's say that again, we entered position with limit order, we have stop loss on stop order. So if we lose, we actually lose 130. And if we gain, we actually gain 380. So you see that I would only win 114 instead of 140. So yeah, let's assume that this is, you make 10 trades a month, you would win $1,140 instead of $1,400. So that's a big difference. I mean, it's a significant difference. And this is assuming that you're taking a limit orders, which sometimes it also implies that it's really important to take limit orders, not market orders. Because for instance, let's put market order in, then you would actually lose 140, and when you gain, you would only gain 360. And then look, then you would only win $100 instead of 140. So that's a 40% decrease in profits. So yeah, I hope that even if you didn't understand every single thing, that's completely fine. I know it's a lot to take in, and it's not. I mean, there are a lot of numbers here that can be a little bit confusing. I guess, because like I made this really for myself, but I was thinking, look, I really want to share this because I was talking with another trader, and when I told him that, he was like, "Oh man, I really made him think." So I thought, you know what, I'm gonna share this with you guys, and so that you can get something out of it as well. So bottom line is, if you can't go to, for some reason you can go to exchange which has like GDEX, or if you need leverage, and you need to be on, I don't know, Bittrex or whatever the exchange you are on, or Binance even, just to note how important it is to take limit orders, because that decreases your fees for half. Instead of zero point 0.2, you will pay 0.1. And yeah, and also I think like on Binance, you can use their coin as their fees, and that even decreases your fees, which is even better. And another thing to notice, this is interesting as well. Again, a little bit more advanced, but I would also encourage you to take. And I've never taken this before. I've only learned this yesterday after seeing this, this fees, that I could also, for entering the trade, I could also use stop limit order, because what that will do is, okay, can I draw on this somehow? If I could draw on this somehow, that would be great, but I don't think I can. I mean, I'm sure I can, but I just don't know how. So stop limit order, what it will do is, maybe I can find some arrows. Yeah, I won't waste too much time. So stop limit order is that, for instance, that you have a strategy that triggers on a breakout. You usually use stop orders on a breakout. So let's say that you're in triangle or in a channel, and you say, okay, when I go past a certain price, let's say that when the price goes over 10,000 in Bitcoin, it will just go, it would have a strong bullish run to the upside. So usually you would use stop order for that. But stop order will take 0.2% of the fee. So what you can do is put stop limit order in, which means that when you come to the $10,000, your limit order will be put in. So you can say at $10,000, put in $10,000 limit order, or you can put it a little bit lower. I still have to experiment with it a little bit. I did experiment and I saw that it really is just 0.1. But of course, the problem is because you won't. Sometimes you won't get filled, because if the price just jumps, really doesn't even come back to 10,000 after crossing it, you just lost your trade. But what I'm thinking is, look, I don't even care if I lose a trade or two, if I miss a trade or two, um, when I'm, for the sake of not paying the higher fees. Because in long term, and it's all about the long term, you have to think in probabilities. With trading, it's all about the long term, and it's all about the mathematics that is behind the strategy that you're doing. And in the long term, I just know that I profit way more if I have stop limit order, and if the as I said, if the price just follows through, I don't even mind like missing it. Because even if that means, what that means usually, if you would put stop order, and if the price didn't even retrace back to 10,000, that means that the spread is really big. So you wouldn't be filled at 10,000, but you would be filled a little bit higher, which makes your risk even greater, because you're entering later. So that's another thing that makes me consider stop limit orders. And because I used to use stop orders quite a lot, because in the strategy that I'm using, it's based on stop orders, but I'll just start using this for sure. So, all right, I hope that made sense. And if you like the video, like, share, and subscribe. If you have any questions about this, you can send me an email, or even better, just post under the video so everybody else sees this as well, the question, because probably a lot of people would have the same questions relating to this. So by you asking the question, I think a lot of people will get their answer as well when I answer their question. So that's really it, and all the best with your trading. Good luck.